So we're dealing with three concepts: risk, volatility, and performance. Okay, so I've addressed the risk issue by pointing out that there is existential risk in your given network or frame of reference. And I just want to make that point that once you understand that risk of being in that frame of reference, then you have to figure out what's the source of the volatility and the performance. And if you don't understand why the asset does what it does, if you don't understand the economic physics involved, then you'll think it's random, and you'll feel like the performance is risky. But I want to give you an example of a physical metaphor. I'm a hiker and I come across a mountain lake, and the mountain lake has 500 trillion gallons of water in it. And yeah, I don't know how it got there, but it's there. The water's chilly, it's clear, and I look down and there's a waterfall coming off the mountain lake. And the waterfall, it's very beautiful and it's very turbulent, right? Water is turbulent in a waterfall. Water is not turbulent in a glassy lake. So the turbulence is volatility, right? And there's waterfall. And then I look at it, and now if you look at it, you say, I don't know why that water falls downhill. I don't know if it'll keep falling downhill, but I hate the volatility. Then I guess you can take a selfie in front of the lake, go swimming, get cold, and leave. But if, let's say you're not a tourist, but you're an engineer. So you come across the same lake and you see the waterfall and you see the 500 trillion gallons, and you think about gravity and you think about sunlight. And now I know how the water got there. The water got there because the sun shone on the ocean. The water evaporated from the ocean. It rose up in the clouds. The wind blew it against the mountain. It condensed and it rained into the mountain, and the water ran off the mountain into the mountain lake. I know how it got there. And then I think, well, if I create a dam near that waterfall, I build myself a dam, I put a turbine on the dam, and then I drop 1 billion gallons of water. I channel 1 billion gallons of water through the dam, drop it 60 feet. And then I plug that into a hydroelectric power plant. I spin the dynamo, I make electricity. And then if I'm really smart, I run the electric power line to a village down in the valley, and I light up the village or I light up the city. Now, someone can come along that doesn't understand physics, and they can say, good idea, Junior, but what are you going to do when the water stops flowing downhill? Well, I'm like, I actually think the water's flowing downhill because of gravity. Newton solved that for me. And then someone else comes along and says, good idea, Junior, but what are you going to do when you run out of water in the lake? I'm like, well, there's 500 trillion gallons, and I take out my calculator, and 1 billion gallons or whatever, it's going to last a long time. Like, well, it's eventually going to run out. I say, well, the sun keeps shining on the ocean, and the ocean keeps lifting the water out of the ocean, and it drops it on this mountain, and that's why there's water in the mountain. But you're right, there's some kind of natural limit, and I suppose there's a limit to the amount of energy I can pull off of this dam, but it's a large number. It's a lot more than your donkey cart, and it's a lot more than your steam, wood stove, and it's a lot more than your coal power plant. And maybe it's a lot cleaner than burning, gasoline. So I'm an engineer, and you're seeing performance thinking it's random, and that's why it's going to stop. And you're seeing volatility, and you're thinking it's random, and maybe it'll stop. And here with Bitcoin, the reason Bitcoin's performing is A, it's volatile, but B, it's a more energy efficient state. The water is flowing down 5,000 feet because it's a lower energy state 1,000 feet below the mountain. It's a lower energy state. You've got potential energy in the water, and it wants to go to ground, and that's just physics. The 500 trillion gallons of water is $500 trillion. And the $500 trillion of assets are sitting in real estate and currency and sovereign bonds and corporate bonds and artwork and equity. And they're invested in the stock of a company in Africa that's going bankrupt. I think at some point the general sentiment will flip from being short to being long, and we'll have a face-ripping rally north. I just can't tell you when.
The monetary order is breaking down. Okay. What I mean by the monetary order is that fiat currencies and debt as a storehold of wealth is not being held by central banks in the same way, and that there was a change. The biggest market to move last year was the gold market, far better than the tech markets, right, and so on. And the U.S. markets underperformed foreign markets because of the fact you could see it in the numbers of the central banks and so on. So let's just look at the fact that on the other side of trade deficits and trade wars, there are capital and capital wars. And so as we're looking at that, and you reported what the stock market and so on, but you didn't report that the gold market is also up 3.
We did say that earlier this morning. Okay. It's up to record levels again, and silver.
Is you look at what is happening and why it's happening, and who's buying it. So let's just take a moment on that capital war issue, okay? We know that both the holders of US dollar denominated debt, which is money, and those who need it, the United States, are worried about each other, right? So if you have other countries who are holding it and they're worried about each other, and we're producing a lot of it, that's a big issue, right? So you have to explain what is going on with fiat currencies, generally speaking. And now if you take the conflicts, you can't ignore the possibility that capital wars, in other words, maybe there's not the same inclination to buy US debt and so on. We at least need to talk about those possibilities and find out who is buying and selling what that is behind these market movements.
We believe that outside the United Nations, this is the largest gathering of global leadership of the post-COVID period of time. For many people, this meeting feels out of step with the moment. We hear all about the elites. And how does that play out in an age of populism? How does an established institution make a difference in an era of deep institutional mistrust? And there's some truth to the critique. I believe in this forum for a long time. I certainly wouldn't be leading this if I didn't believe that we can change and make the world better. But it's also obvious that the world now places far less trust in us to help shape what comes next. If the World Economic Forum is going to be useful going forward, it has to regain that trust.
Banks should have to compete on a level playing field, and if the American people feel like the banks are not paying high enough interest rates and stablecoin rewards can offer them more, then maybe the banks should have to pay higher interest rates to compete, right? I don't think there should be any protectionism.
Do you think that was put in directly for the banks, that was lobbied by the banks and put in?
Yes.
The consistent fear that I hear is that there's still this perception that digital assets are not welcome in the mainstream economy, and let me promise you that our effort to change the policy is purely about changing that. We want our fellow Americans to know that crypto and digital assets, and particularly Bitcoin, are part of the mainstream economy and are here to stay.
The way to de-risk this and the way to promote progress and growth is to go out and act on your principles. Don't be afraid. Listen, everyone's afraid of risk, but there's risk everywhere. You know what's riskier than buying Bitcoin? Not buying Bitcoin. What's riskier than buying Bitcoin is not buying Bitcoin, right?